Hey, hi everybody. It's Frosty here again from South Florida. On this video, I'd like to tell you just exactly how we use my algorithm and the strategies to make money using my simple ideas to keep the risk off, but yet make some nice jingle on the side. Okay, the Frosty Investment Club is dependent on the algorithm I wrote years ago for my senior project. Each Tuesday after the market closes, I run the program on the 20 sector ETFs I'm currently following. All right, the numbers get crunched out through the program. I'm not going to get into that. That's my proprietary information. But they fall into 10 divisions. Okay, there's either a new up or down trend signal. There's a flipped up or down trend signal. Then there's the target METs on both the upside, downside, new and previous, and unmet targets on the up and downside. So there's 10 different ways to look at each sector ETF we're looking at. So let's go through those real quick. Simply stated, a new up means that ETF's a buy. If I'm going to buy it, my idea, and most of my trades normally happen on a Wednesday morning. My buy trades happen on a Wednesday morning after I've run the program. So let's say last night the XLI, that's the industrial sector, gave a new up. The price was around 97 and a quarter. So this morning I would have bought a 97 and a quarter. I'd have bought 100 shares of the ETF at somewhere between 97 and 97 and a quarter. I'd be careful about getting the right price. Then I would sell the covered call for next Friday expiration at the 99 strike price. So I'm looking at making at least a $200 gain on this trade. 97 and a quarter to 99 plus whatever we get for the premium on the covered call. So that's the way you handle a new up. You get a new up, start looking, and if you can get the right premiums on the covered call, the right price for the ETF, you'll buy it. It's a done deal. You're holding it in your portfolio now. A new down trend signal means don't even think about it. Or if you're holding that position, then you want to think, is it time to get out of this one? Have I met my target? If I've met my target, I'm gone. If it hasn't met its target, you have any chance of selling the call again at a higher price, or is it just time to get out? Takes a little practice to get the feel for that, but it is a targeted exit strategy. Time to get out. The flips are the hard ones. The flips mean that the stock has given an up 1 week or down, and the opposite signal, the down or the up, the very next week. That stock's or that ETF's in a range. Okay, it's undecided on just which direction to go, and this is where you need some other information to make a good buy or sell decision. I don't automatically just throw these out yet, because if I don't have any new ups or new downs, I have nothing to trade, then I can go digging into these. But you don't just buy a flip or sell a flip without doing more homework. The target METs are simple. It's either a new one or a previous one, up or down, means you hit the target. If you hit the up target, it's time to get out. Hopefully that covered call gets assigned and you take a nice profit, or just sell the whole position and take the profit. Time to move on. We've made our money. A new down, a down target MET means that ETF just went on the watch list. We're watching that one for a flip. We're watching it for it to come back up. When it starts back up, we buy. Buy low, sell high. I know it's old. I know it's cliche, but it does work. The unmets are just that. They haven't met the target yet, either up or down. If you own it and it's unmet, just keep holding it. Just keep selling calls. And if it's unmet down, that means we're not looking at it yet. Okay? We're just waiting for it to achieve the target one way or the other. Okay, I made that pretty simple. And if you keep following my feed, I'll show you examples of how I make these trades every week. I have something going every week, and I'm making money, or the 2.65% since I started the fund back in May 18th. That's in 3 weeks, 2.65%. Do that on a yearly basis, you're better than 30%. Okay, again, I'm not a financial advisor. This is not financial advice. This is what I'm doing to make money. Make your own decisions. Do your own homework. But if you like my ideas, click on Frosty over there. Subscribe to this channel so you can keep getting my updates. Thanks for watching. For now, we'll say Frosty out.